Hello, and welcome everybody back to AR Crypto's Launchpad series. My name is Coach Casey, and I'm grateful to be back with you guys. If you weren't here for part one of the Launchpad series that I did, what we're going to be doing today is talking about what is decentralized finance and really following up on what we introduced last time around. So we'll go ahead and get into it. I'll tell you a little bit about myself, and then we'll be talking all things DeFi. So let me share my screen, and then I believe there's my audio I'm seeing on here is not coming through my headphones. I think it's coming through here. So give me just a second to work through that. So sorry for the technical trouble here. All right, I think that should be fixed now. So let's go ahead and get the screen shared and get into it. So what we're going to do today is I'm going to talk through a couple of things for you. I'm going to explain some things like I typically do when we're on here, and then we can get into a bit of a demo where I'm actually going to show you the applications in DeFi and how these things work. So let's go ahead and share the screen. All right, perfect. So like I said, we are on part 2 of our Intro to DeFi series, just talking about how to get started in cryptocurrency, how to get started in decentralized finance, and understanding what the difference is between the traditional financial system and this new peer-to-peer financial system that we have that is really starting to level the playing field for the average person and investor. And so I'm going to talk today about what some of the secrets are that Wall Street and the banks don't want you to know, and why there's so much friction and resistance towards this new evolution of finance that's taking place right now. So our game plan is to talk about, again, what is DeFi? We're just going to follow up. If you came for part 1, this is going to be a little bit repetitive to get started, just to kind of catch everybody up to speed. And then we're going to get into what are these decentralized applications that I'm talking about, and how are they different from the traditional financial instruments that we've really used up to this point. But before I do that, I do want to give you a little backstory if you're new here and you're not familiar with who I am and who we are here at the ARC. So first and foremost, my name is Coach Casey. And again, I'm really grateful for your time and your energy here today on this call. You guys are action takers that show up to these things consistently. I can tell that you want to self-educate and you want to make a change in your life, and you want to do something different for yourself and have a different outcome than what everybody else is used to, and what kind of we're primed to do in life. And what you'll find here briefly, the reason I'm giving you my story is because I've been through something very similar. And so I would love to just share a little bit with you so that you can understand kind of the space that I'm coming from, so that we can relate a little bit. So who am I? Well, again, my name is Coach Casey. I'm a partner here at AR Crypto. We are a cryptocurrency and DeFi education company. And our mission is just to help as many people get started as safely and responsibly in crypto as you possibly can, as well as, once you get into this space, how to navigate, how to avoid scams, how to operate safely with your wallet setup and the investment opportunities that you're looking at, how to find projects and evaluate, and really just reduce your learning curve from the mistakes that we've made over and over and over again when we were first getting started in crypto, right? So that's what we're here for, is to reduce your learning curve. I head up the research and education here at AR Crypto, and I've been able to create financial, location, and time freedom for myself through cryptocurrency strategies. So for me personally, I can give you a little bit about my journey, but in 2014, I first got into Bitcoin for, to be honest with you, frowned upon reasons. And when I say frowned upon, I mean I was buying fake IDs and drugs on the dark web. And that's how I heard about Bitcoin. But at the time, it was really tricky to interact with Bitcoin, and I didn't know what I was doing. I wasn't being an investor. I was being a shithead at the time. I wasn't buying it because I understood the technology and I got this new financial revolution that was occurring. It was a means to an end, right? So that's how I was first exposed to Bitcoin. Had some left over, but like I said, it was tricky at the time to interact with, so I had some left over. So in 2017, I started hearing more about Bitcoin again. I realized I think I have some of this Bitcoin stuff laying around somewhere. I found it, sold almost all of it at a 50x gain. Thought that I was the most legendary investor of all time, really gave myself some big kudos for that one, but realized quickly that that money wasn't good for me at the time. And so the reason I say that is because oftentimes people think when you start to talk about your story, and I got into crypto early, they think, wow, you were really set up, right? You were kind of set for life there. You fell into this windfall of money. You did XYZ, right? It's really cool that you got into Bitcoin early. But I wasn't in a place in my life where I was a servant of that money that I had. I was addicted to drugs and alcohol in 2017 and 2018. And so here's a photo of where 2018 went. This is actually my bill from going to inpatient rehab treatment. And so I'm happy to report that I'm now over 6 years clean and sober. And so, there is much brighter days ahead, and there's a light at the end of the tunnel. But I show you this to show you that I needed to work on my mindset at that point in time first as well, right? So that's another really, really key, crucial component to this. Everything that we do at the ARC and everything that you want to learn about cryptocurrency is the mindset to be a good servant of that money. If you make a bunch of money right now, it doesn't change you as a person. It really kind of exacerbates what you are and what you're doing. And at that point in time, I personally was using a lot of drugs and alcohol. And so that the money that I came into from this Bitcoin, it swiftly led me down a very, very bad path, led me to jail and rehab, right? As you can see here. The reason I tell you this story is not a woe is me sob story. I mean, it turns out it was the greatest thing that ever happened to me, but it's to show you that I didn't start with some huge leg up. I didn't start with some kind of advantage over anybody, right? And I think when I was trying to learn these new concepts in finance, my real estate mentors, my crypto mentors, I often felt like there was a really big gap between myself and where they were at. And I almost couldn't see where that gap could get filled. I couldn't see myself in their shoes. I thought there was too far of a separation between us. And so I show you this to kind of humanize what I've done here and show you, listen, I started this stuff with $130,000 in debt. All right. I started I didn't know what I was doing. I didn't have anything other than the education that we're going to talk about here today. So that's a little bit about who I am. Luckily, things turned around, right? So in 2019, I became interested in crypto again. I started buying Bitcoin and ETH, but really wasn't sure of what I was doing much. So in 2021 was when I joined the ARC as an Apex student. And that's where I really got into DeFi and understanding, okay, how does this new financial system work? And that's what we're going to spend time on today. And by March of 22, I replaced my 6-figure salary with crypto, and I was able to fire my job. So those 3 things that I had been after, that time, location, and financial freedom, I was able to do that. Okay. So it started off in really when I became interested in crypto over the past couple of years, but it was ignited when I learned decentralized finance. And I really, really understood this new system that we're going to talk about today. So I was able to go from 6 figures in debt in 2018 to now a multiple 7-figure net worth in just a couple of short years. And listen, I get it. It's the tchotchke, yacht picture here, but I show you this to show you this is actually on a Monday afternoon with some friends of mine in Miami. And the reason I show you this is because when I was sitting in my office, I never could have imagined sitting on yachts with my friends on a Monday afternoon because we felt like it, and printing money from our laptops. It's the kind of life that you could never imagine. And like I said, just a few years prior, I was sitting in rehab with no money, with nothing going for me. And you can make this stuff happen. You've just got to take it seriously. So I hope that helps you to kind of understand where I'm coming from here, and that I'm not just like crazy internet guru lady who she had a bunch of money to start or whatever like that. That's not the case at all. And through cryptocurrency and through DeFi, I found purpose, because that was something I really struggled with for a while. I became passionate about self-education and the technology behind it and financial freedom. And now I get to share that passion through educating and empowering you all. I want you to never spend a day doing things that you don't want to do. If you don't want to go and work a 9-to-5 job, or maybe you do, or maybe you don't want to miss your kid's soccer game or something, but you always have to because of the obligations that you have. I don't want you to ever have to do that. I want us to all have the freedom that we want in our life to be able to make choices, right? If you want to go work a job because that's what you choose to do, wonderful. But I want you to be able to have these choices in life. And so that's why I'm here to help to educate and inspire people to look at these emerging asset classes, look at this new technology that's coming, because it has completely changed my life. And I think that it can yours too. And so before we get into the actual content, the material of today, again, just want to say thanks for listening to a little bit about who I am, and I hope that it helps give you context about where I come from and all of that. So, but I do have to let you know that I am not a financial advisor, and this is not financial advice today. I'm here to talk with you about the things that I've learned in the space the past couple of years, and you know, education, entertainment, maybe a couple of bad jokes here and there. But other than that, this is not financial advice. I'm not your financial advisor because I am not a financial advisor. All right, so let's get into it. So I'd like to talk with you about the way that the way that the markets work. I'm sorry, I hate to be rude, but I'm gonna scoot over because my laptop's reflecting the sun into my face, and I'm sure it probably very well in here. So, okay. So there are two markets that you need to be aware of when it comes to cryptocurrency, when it comes to finance, okay, as a whole. When we're talking about traditional finance, we're talking about the new money, crypto, decentralized finance. There's two markets. So there's TradFi and there's DeFi. All right. So TradFi, or traditional finance, this is the legacy banking systems and institutions and you know, brokerages and hedge funds, et cetera, right? That's traditional finance. And then we've got DeFi, which is, again, this emerging technology that is decentralized finance that I'm going to break down. And really simply put, what decentralized finance is a peer-to-peer financial system that eliminates the need for any kind of central intermediary like banks and brokerages that I had previously mentioned. So we think about our transactions that we do, whether it be financial or any kind of, yeah, I guess in finance, any kind of transaction that we do, there are middlemen, there's friction, there's layers to it, right? So all of your transactions must go through a bank or a broker or some kind of middleman that's in the way. And by in the way, I mean slowing down the process, charging lots of fees, and telling you what you can and can't do, right? So in DeFi, which we'll look at today, a lot of that's eliminated. You don't need to ask permission from people. You don't have the friction of being able to move certain amounts of money to different places or having to ask permission to spend your own money, those types of things, right? So this is kind of the biggest difference between TradFi and DeFi. So I want to set the scene a little bit there. And I like to call this ours versus theirs because this is our money. DeFi is the people's money. And when I say that it levels the playing field, I mean it. All that you need to operate in DeFi is internet access and a device that can access the internet, right? You don't need to have a minimum amount of money in a bank account somewhere. You don't need to have a certain status with a certain bank to be able to do XYZ. This is a truly peer-to-peer financial system that anyone can access, regardless of their location, regardless of their financial status, with just a connection to the internet. And you can create a wallet for free, and you can go do these things. You also don't have, like I said, the friction of the middleman. If I wanted to send you money in this peer-to-peer financial system, it goes from me to you. There's no middleman. And we're going to elaborate on these things, like I said, as well. So again, just kind of wanted to set the scene a little bit for why do I call it our money versus their money? Well, because it's our money. It's peer-to-peer. It's from me to you. It's from me to the people in the ecosystem and from them to me. And we serve as the infrastructure and the ecosystem utilizing this new technology that we'll talk about today. So let's talk about their system, right? The banks, the institutions, the brokerages. Let's talk banks. I don't know if you saw earlier this year, but you know, Republic First Bank in Philadelphia became the first FDIC insured bank failure of 2024. How does this stuff happen? Well, it's because they've got more outstanding unrealized losses than they've got assets on their balance sheet. That's what happens. It's because it's funny money, as you'll hear us talk about it sometimes. They've got more losses than they have assets to account for those losses or to be able to cover those losses, right? So you might be thinking, well, it's the bank. How does the bank just not have the money? Well, it's because of the lending practices and the fractional reserve banking that takes place, where it's just numbers on a screen. There's not actually money to back most things that happen when it comes to banks. And there's a massive risk of bank failures. There's a lot more that could happen. I mean, if we look at these different analysts are saying that, this is out of Auburn, that 300 banks are at higher risk of failure after an evaluation of what happened with Republic First. And so when you look at these types of things, you start to think, if I can't have my money in the bank, who can I trust? Because you don't know what the bank is doing with your money, right? Another thing is, when we look at their system, there's a lot of manipulation that occurs, right? Let's talk about Wall Street. Let's talk about the stock market. I just grabbed this screenshot for you of, this is the NASDAQ halt list. These are stocks that are halted for various reasons. Sometimes it's because it's too volatile, so we're going to protect consumers, and other times it's because of XYZ, right? But stocks get halted for trading all the time in the stock market. Now, what I'm going to show you today about decentralized finance, we're going to talk about decentralized exchanges, which are like our peer-to-peer version of a brokerage. There is no halting. There is no, oh, because it did this, we've decided to do this, or XYZ, right? It is trustless and permissionless, and we don't have to think about all of this. Of course, there can be whales and insiders, large holders and things that can manipulate prices of certain assets and such, like there can be with any financial assets. But as far as the day-to-day, hey, we think that this thing has gone up too much, we're going to halt the trading of it. That's not happening in DeFi. And again, I'm going to break it down and show you why. So if you recently heard about the GameStop incident with a fellow named Roaring Kitty, his name's Keith Gill. He's a retail trader that turned $50,000 into a few hundred million, actually over $1 billion at one point in time, unrealized, of course. But what he did was he took a massive bet on GameStop and was really betting against all of the major hedge funds and institutions that had short positions on GameStop. And if you're not familiar, what they do is they borrow GameStop stocks and they sell them and think that they can buy them back cheaper when the price falls and then pay off that loan, and they profit the difference, right? That's how they go short. So they're very heavily leveraged on these GameStop positions. Well, Keith Gill, or Roaring Kitty, rallies the troops together on the internet. He gained a massive following, and people started to really buy into GameStop. People started to then get the price to go up. They started what's called short squeezing these institutions. Well, what happens in those scenarios is that the institutions then have to turn around and buy GameStop so that they can cover their positions. So they don't get liquidated. And liquidated means that they didn't have enough collateral, so it's the forced sale of their position. Okay? So anyway, long story short, when that happened, the NASDAQ halted trades on GameStop. At one point, Robinhood halted trades on GameStop. There's a lot of things that are happening there because all of the big dogs in the space are getting screwed. In DeFi, this isn't happening. Trades aren't being halted of these kinds of assets. And again, I'll show you why here in just a moment, but wanted to explain what I meant by the stock halts. So that's more traditional finance, right? We're talking stock market, we're talking banks. But even when it comes to crypto things, if we're looking at the theirs versus ours notion, well, theirs, this is still theirs. Coinbase and Binance and Crypto.com and Kraken. And while you may say, well, Coach Casey, those are crypto exchanges, right? Well, they are, but they act just like a bank or an institution or the hedge funds or those guys, not so much the hedge funds, but the exchanges and the brokers in traditional finance that we're trying to get away from, right? The reason for that is because they have a few issues. The cryptocurrency that is sitting on, let's say, Coinbase or Binance, whatever, any one of these platforms, your crypto assets are in their wallet, not yours. Okay, so what I mean by that is what's called, your crypto is in their custody. So they are the custodian of your crypto assets. And on most exchanges, your assets are reflected on their balance sheets as assets that exchange owns, right? So in the event of a bankruptcy, your funds go with them as an unsecured creditor. that can take months, if not years. And sometimes you might not get your money back at all if that were to be the case, because the crypto is sitting in their wallet, not yours. The other problem with that is, let's take FTX, for example, the big exchange that collapsed, right? If we look at FTX, this is the, if anybody's familiar with, I mean, FTX was, they had sponsorship deals with Tom Brady. They were doing a kind of a world tour of FTX being the greatest exchange at its time. FTX was one of the largest centralized exchanges in crypto, and everyone thought it was too big to fail. But what they didn't account for was the fact that, again, this custody, this manipulation, and the friction that occurs there. So when we talk about the custody things, going back to that, FTX was using user deposits to go fund sister companies and shady investment deals and buying real estate and having crazy parties in the Bahamas and doing all kinds of things like that. Versus on a decentralized exchange, so not like crypto.com or Celsius or Binance or any of the Kraken, any whatever ones I mentioned, your crypto is in your custody. It's not sitting in the wallet of that exchange. It is sitting in your wallet, in your custody. And again, I'll explain that here shortly. Additionally, you can't see with centralized exchanges, there's no transparency into what is happening with user deposits. So when you deposit your fund on, or when your crypto assets onto Coinbase, crypto.com, whatever, you can't see where that goes. So all of us on this call here today, we could all buy one Bitcoin, all right, on, let's say, Coinbase. We don't have transparency into verifying that Coinbase has enough Bitcoin to back each of our transactions, because we can't see how many people are on the platform and all of the real-time data of what wallets are using what, right? So there's no transparency into the reserves. Yes, there is reserve information available, but you can't see what goes where, what's getting controlled by who, and your actual crypto assets, because they're not yours. They're just theirs. Your crypto assets are just in pools of money with other people's money in their wallets, right? So if recently you've been, maybe you're a member, you're a user of Coinbase. A lot of people come to these. Maybe you've started out on Coinbase. Recently, there's been a couple of days where the Coinbase app has been out, both the desktop application as well as the mobile application. What do you do then? You can't access your funds when that happens. Coinbase is offline, you're out of luck. So if that scared you when that happened, go back and watch the part 1 of this series where I talk about wallet setups. I talk to you about your MetaMask and your Ledger and the importance of self-custody. Again, not to harp on it over and over again, but it's crucially important in this space. Go back and watch that and understand how you can get your funds off of centralized exchanges into your own custody, so that you can operate in this new peer-to-peer financial system without having somebody be in control and be like Big Brother over your funds. All right? Get your crypto out of Coinbase's wallet and into your own. So backtracking just a second, while they're a great starting point, they come with their problems, right? They're a great starting point for people, because when we start out in this space, that's where we go. We go to centralized exchanges. Nobody starts in this space just knowing DeFi, right? You go to Coinbase. It's what everybody's using, you think. And it's got a great, easy to use user interface, and it's simple to navigate. You buy some crypto, bada bing, bada boom. But you don't understand that custody piece of things, right? You don't understand what you're possibly setting yourself up for, and you don't understand the ways that they make money. So these exchanges, just like the banks and institutions, one of the ways that they're making money is from the spreads of what they're actually charging you for the crypto assets, as well as the fees that they're charging on these platforms. And it's pretty ridiculous at times. So the fees that are assessed by them, they're not the fees that are associated with doing the actual transaction on the blockchain, like the computational power required to do the transaction. So like gas fees, if you've heard of them before, which are just the transaction fee you pay in DeFi. No, these exchanges all have arbitrary values for whatever their transaction fee that they want to charge is for whatever the transaction is that you're doing. It doesn't come from anything in most cases. It's just they decided that on this blockchain we want to do a a $2 fee on every transaction. And you know dang well that if you would go use that blockchain yourself, the transaction's only going to be a fraction of a penny to even operate on, right? These exchanges, that's how they make money. So how can we go do this stuff ourselves so that we're not getting nickel and dimed on transaction fees? We're not getting these awful exchange spreads for, you know, like if I want to buy Ethereum, let's say, for example, on crypto.com, I'm going to get a worse price than if I were to go buy it in decentralized finance on the open market. All right. So again, let's talk about that. Let's go look at what it is that I'm talking about. I know some of these concepts are a little bit arbitrary until we actually get to go see it. So just wanted to set the stage that, like I said, centralized finance might be convenient, but there's lots of disadvantages to using it. And if you want to truly be in crypto, you've got to learn how to do this stuff yourself. You can't keep relying on this. DeFi, or as I call it, the people system, offers these solutions to you, okay? So before we jump in and start looking at these applications, I've talked a little bit about CeFi versus DeFi, right? Centralized versus decentralized. And so let me paint the picture. I think a visual often helps. When we look at centralized entities, we can think of Coinbase, right? We can think of the banks, the institutions, the brokers, whatever, the proverbial middleman. They've all got these single points of failure like this, right? So any user bases, any transacting, anything that happens, it all goes through this single point of failure in communication. Versus in a decentralized system, it's a vast network of computers that are spread out all across the world and operated independently by thousands and thousands, if not millions of people in many different cases. So while you may think of, let's say, Ethereum, for example, as just a cryptocurrency, what you might not know is that it's actually an entire open source network that is used to build upon. So again, if you haven't watched the first part of this, I kind of break down and explain what are blockchains, what are smart contracts, how do these types of things work. So definitely get yourself caught up if you've missed the part one. But if you haven't watched it, again, you might think of these things like Ethereum as just a cryptocurrency. It's a token, right? Well, it's far more than that. It's actually, it's a base layer for hundreds of thousands of applications in financial technology and in the surrounding kind of realm to be developed upon. So Bitcoin acts almost as like a digital gold, right? Where it's a store of value. It's can be used as a medium of exchange. It's not too much because it's pretty volatile, but you know, can be used for remittances, but it's primarily a store of value and hedge against inflation. But that's really what Bitcoin does really, really well, and that's kind of it. Versus Ethereum, the purpose is not just, oh, you buy Bitcoin or you buy Ethereum to hedge against inflation. The purpose of Ethereum is, oh, this thing powers this entire new financial ecosystem, right? So again, we might be thinking of it as, oh, this cryptocurrency, this cryptocurrency, this cryptocurrency. There's a whole world here that I'm about to open up to you if you haven't seen DeFi yet. All right. And the biggest differentiator between DeFi and CeFi or centralized finance is this decentralized nature where the power does not have one single point of failure. It is distributed amongst a vast network of computers, which makes it secure. It's very transparent and it's open, right? We can see what's going on. That's where the transparency comes in. So just a final comparison for you of DeFi versus CeFi. In the centralized finance system, everything is permissioned. It's closed off. We can't see into these systems. We can't verify. There's a saying out here in crypto that goes, don't trust, verify. It's because everything can be verified on this transparent blockchain or this ledger that we can see everything on. Your transactions can generally always be censored in centralized finance and CeFi. Why do you think, I don't care what side of politics you stand on, why do you think when there was the Freedom Trucker rally in Canada that, you know, the government started shutting down their bank accounts for participating in donations towards the, you know, the folks who didn't want to be vaccinated and wanted to drive their trucks? Why do you think they started taking Bitcoin for payments? Because it's censorship resistant. There's nothing that anybody can do. Now, of course, they can make it hard for you to off-ramp, which they did then, but they can't stop you from interacting with Bitcoin. All right, it's censorship resistant. There's no friction, there's no gatekeeping, there's nothing like that. It's also very, very cheap to transact on all of these different networks and blockchains. If you think about, if I wanted to send a remittance to somebody who is in Shanghai right now, it would cost me a lot of money to do that. I'd probably lose at least 10% of that transaction if I were to do such a thing because of the methods of getting the transaction there. That might be a bit aggressive, 10%, depending on the transaction size, but still, there's massive fees and massive delays and time and XYZ that it takes to do that. When we're talking wire transfers, we're talking ACH, all of these outdated payment rails that we've been using, Western Union, right? These are all, it's all friction. It's all layers and layers of fees and slowing down the process. It also can be a lot cheaper on the blockchain, right? So, for example, we pay all of our team on the Polygon network. On the Polygon network, when we pay out all of our team, it takes a couple of seconds, costs us a couple of pennies. Everybody gets paid at the same time in the same currency. There's no waiting. There's no asking somebody. There's nope. It's just, hey, your pay was sent. And by the time I tell you that, you probably got it. That's how quick it is. So again, it's faster, it's cheaper, it is open and transparent. It is now a way, and listen, this is where the government and these existing systems, this is where they're terrified. I don't know if anybody's heard recently, Robert Kennedy, RFK, if you've heard him talking about, hey, if I were elected, I would want to put the national budget on the blockchain. And people are like, what the heck's the blockchain? And he's like, yeah, it's this big transparent ledger that all the crypto nerds have been trying to tell you about. And there's no secrets there. So we would see everything that's happening. And you know why everybody hates that idea? It's because the Pentagon has failed 6 out of the 6 audits that they've had. And last audit, $2 trillion, with the T, trillion dollars was unaccounted for. Couldn't tell you where they spent it of our national budget. So when RFK comes in and says, I want to put this stuff on the blockchain, they're like, oh, whoa, that's that, I don't know, that's that internet conspiracy money that you're talking about. No, it's because it's going to show your cards. That's what's going to happen. So again, we're permissionless, trustless, decentralized. It's cheaper, it's faster, and it's censorship resistant. That's the biggest differences between DeFi and centralized finance. So let's go take a look at some of these apps that I'm talking about. Give me just a sec to open up another tab here. Let's see. I think I'm gonna have to stop share for a second so that I can change the tab. All right, hold on just a sec. All right, we've got some money here. All right. Sorry about that, everyone. I'm on one screen right now, so apologies for the little downtime there. All right, so what you're looking at here is what's called a decentralized exchange. So I just want to talk through a couple of these decentralized protocols that I had, been mentioning ad nauseum today, that are so much greater than all of the centralized exchanges and such that we use. So people often come to me and they say, well, Coach Casey, if you're using this DeFi stuff, well, how the heck are you getting the cryptos that you want to have? How are you, if you have Ethereum and you want to go buy something else, how is it that you're actually acquiring this something else? Or how is it that you're trading in DeFi, or you're making these kind of exchanges? Well, again, we have what are called decentralized exchanges. So PancakeSwap is effectively a code base that's deployed on the blockchain that is not run or controlled by any one person. Okay, it's decentralized. The code is open source, so we can determine whether or not it's safe to operate with, and we can determine the ability for it to be hacked or exploited, right? There's auditing firms and there's third-party companies that can look at this stuff and help you decide if it's a good opportunity for you to get into, because you can't read the smart contract code yourself, right? So, all right, we know that PancakeSwap is safe. PancakeSwap has been around for a really, really long time. It is, kind of the gold standard in terms of safety and security, and they like to call themselves everyone's favorite DEX, and I'd have to agree with that. PancakeSwap's got a great user experience, and like I said, it's been around for a long time. But anyway, we look at PancakeSwap. What exactly are you looking at here? So something that I'm going to show you quick is I'm actually just going to disconnect this and then reconnect it. When you come to a decentralized application, This is what we call Web 3. Right? You've heard of Web 1, Web 2. Maybe you haven't heard of Web 3, but think of the concept as like, Web 2, you sign into things with your email address, your password, even your connect with Google, Facebook. Now in Web 3, we come and we connect our wallet that can then view and suggest transactions and view our balances and suggest transactions for us to approve and interact with things. So you come and it's very efficient. We hit connect wallet. I'm going to connect our MetaMask and cough cough, you should have had your MetaMask set up as the homework from the last one of these, but I'll hang on if you haven't. Let's see. All right, so cool. My MetaMask wallet is now connected. So we see that this one's in here. This is a public wallet that I use. So let's go ahead and, so again, when you come here, what are the key functions that you're going to be using decentralized exchanges for? Well, when you first start out, it's going to be one of the places that you come and facilitate what are called swaps. So a swap is effectively how you exchange one asset for another. So we're going to go to the trade tab and hit swap. And this is how, let's say I hold BNB in my wallet, but I would like to purchase some cake. Well, I can come here and say, hey, I would like to swap 0.1 of my BNB for some cake. And I can do that here. It's going to tell me, okay, it's going to get you 26.19 cake because this is the current cake per BNB price. This is the exchange rate. And it's going to give you all of the details of the transaction down here. Or maybe I don't want cake. Maybe I want something else. You can swap for hundreds of, actually thousands of assets at this point. So another question I often get is, Coach Casey, I'm trying to buy this crypto that I'm interested in, but it's not listed on any exchanges. I don't see it on Coinbase. I don't see it on crypto.com. Where can I get it? Well, it's because these crypto assets generally launch in DeFi first. There's liquidity seated on decentralized exchanges for trading prior to these things getting listed on centralized exchanges. So you actually even have a leg up in the market as well if you're getting into these things before they get onto the centralized exchange listings. So let's say, for example, and guys, this is not at all a suggestion. I don't even know what this thing does. I'm just making an example here, okay? Like this is 120% not financial advice. Grok Tether, for example, doesn't sound like it's something that's on a centralized exchange, okay? I don't know what it is. Again, disclaimer, we're not buying this together. I don't know what it is. So, but if I wanted to buy some Grok Tether because it were something that I had studied and I were interested in, I'd come and I'd say, okay, I'd like to swap for, maybe I'd sell some of my BNB for this Grok Tether. So I'd say I'd like to swap 0.1 of my BNB for, we'll give it just a second to tell us how many hit us. And then in just a moment here, we'd be able to hit swap and we can swap that BNB for Grok Tether. Now, why did I pick that one that sounds like a shitcoin? Well, the reason I picked it is because it's probably not going to be on centralized exchanges. So this would be the way that I could acquire this asset without having to go through some kind of middleman like a centralized exchange. And here's the thing, everybody. My cryptocurrency is in my custody. I'm just interacting with a few smart contracts. So it's not that I have my crypto sitting in MetaMask's possession. My crypto doesn't live in my wallet. It lives on the blockchain. Your wallet, I talked about this in part 1. You should remember, is how you view and interact with your funds. Your crypto assets don't live in your wallet. They are secured by your private key, and your public key is your wallet address that you kind of use to as your unique identifier to interact with these things. Your private key is what allows you to access them. So again, we talked about all of that last time. So if this isn't making any sense, you're not following along, please go watch part 1 so that you can catch up. But the difference between making this swap here on PancakeSwap versus making it on crypto.com is that my BNB is not sitting on crypto.com just waiting for them to hopefully not go bankrupt. It's in my custody, it's in my possession, and now I can come and I can make this swap on a decentralized platform that nobody runs and controls, all using the blockchain and some smart contracts. And then the Grok is immediately goes into my wallet, and I didn't have to interact with any people or ask permission to do XYZ. So when you come down here and you look at the transaction details, like I said, of course, you see the conversion rate between whatever the asset is and whatever it is that you're trying to swap for. You've got your slippage tolerance, which this is a pro tip for you. You want your slippage as low as humanly possible. The reason why is because these markets move whenever you're trying to swap your assets. And you've got to allow for a little bit of slippage, like 0.5%, because the price is constantly fluctuating. But if you allow for no slippage, your transactions are just going to fail. They're not going to be able to go through, because if it's even moving by like a little penny here and there, then your transactions are going to fail. So slippage is, again, it's a part of a transaction that you want to be mindful of, especially when you're starting to use decentralized exchanges, because it is the difference in which you have essentially executed the that you've initiated the transaction versus what it is executed at. Okay. And so slippage is something that I just want to call out, because people often have questions about it whenever you're first starting out, is should I be concerned? Generally speaking, when you're starting, you want to just leave it to the default, which is oftentimes 0.5%. But keep in mind, you want your slippage as low as possible. So don't go setting your slippage at 20% to get your transactions to go through faster, or to get them to not fail or anything like that. You're thinking, oh, I'm allowing more room for movement. Yes, also to be front run, and to you're allowing a lot of loss in that transaction for yourself. Okay, so when we're swapping, we're going from the asset that we have to the asset that we want. We're saying how much we'd like to swap. We're checking that our slippage is as close to zero as possible, while still allowing, obviously, the minimum amount of wiggle room. And then if you look down here, you can see the minimum amount that we're going to get based on this transaction is this much. There's a tiny little price impact here, which is the impact that my trade is having on this basket of this pool of assets. And we've got this trading fee here. Now, this trading fee is what I want to talk about with you. This is kind of the next part of things. So you'll often hear us say at the ARC, you can become your own bank, and you can make money like the banks do. You can make money like the institutions do. Well, this is what I mean. So I've been harping on this as a peer-to-peer financial system, right? So when I say it's a peer-to-peer financial system, I mean the reason that I can come and make this swap from BNB to Grok Tether, and vice versa, if I wanted to swap my Grok Tether for BNB, is because there are peers like me and you that are supplying liquidity on PancakeSwap so that other people can come trade back and forth between these assets. And so if you think about it, it's like, why would you go buy Apple stock from TD Ameritrade? Because they have the stock, right? And they'll take your cash for the stock. Why would you sell your Apple stock to TD Ameritrade if you maybe made profits and you wanted to get out of the position? Well, because they've got the cash and they'll take the stock. So it's like a two-part system, right? Where, you know, we give you stock for cash, you give us stock, and we'll give you cash if you want to sell it, right? So the reason that it's that way is because of, again, there's the liquidity that's provided, but they're making fees by doing that, right? They're charging you trading fees for holding that liquidity and for doing these types of transactions. In DeFi, we can now do that. We can come in and be the liquidity provider. So at the bottom here, when you're seeing this trading fee, this is going to my peers and those of us like you all and like me who can provide liquidity to this market. And guess what? It's not, listen, I promise you, if I called up TD Ameritrade and I said, hey, I would like to come supply some liquidity, they would say, hey, we don't care. Because if you're not providing a few billions of dollars, they don't want your money. They're going to go call up Goldman Sachs. They're not calling up old Coach Casey, right? But in DeFi, it levels the playing field, because now we can do these types of things with no minimum requirements. You could come in here and supply $10 if you wanted to get a feel for it, to get practicing and get started. You don't have to come and supply any kind of, I mean, even this swap that I'm making here, right? It's $60. You can practice these things and you can start small. And there are strategies. There's another one I'm going to talk about today that you can make a real change in your life by learning decentralized finance without having, you know, crazy capital minimum requirements and things like that. So this is the main purpose of a decentralized exchange, is to peer-to-peer system, because peers provided liquidity to this exchange for this pair. Well, in return, I pay a little fee because, hey, it's great that I can come do this and I don't have to rely on Coinbase and crypto.com, right? So it's a win-win for everybody. They supply the liquidity, they make the fees, I get to go and operate in a decentralized manner, I pay them a little tiny fee out of my transaction, everyone's happy. Conversely, if you want to go earn, you want to be a liquidity provider on something like PancakeSwap, we can go to the earn and we can look at the pools and the farms. But let's just go to the farm screen. These are further incentivized pools is what these farms are on places like PancakeSwap and you know, all kind of decentralized exchanges that are out there. I don't want to get confusing now. But if we come here, why are these pairs here? Well, again, these are those trading pairs, guys. These are those pairs, like I was saying, the cash and the stock, or the you know, my BNB versus the Grok, whatever that was that I said. These are those trading pairs. Why are people supplying liquidity to USDT BNB as a pair? It's because a lot of people come and they swap their USDT for BNB or BNB for USDT, and these people all make a cut of the fees. Again, it's peer-to-peer financial system. It's a give and take. I supply my liquidity, and then in return, I get fees. You want to come use the liquidity on this exchange, you pay a little fee. Everyone's happy. Pretty great, right? So this is that decentralized application or decentralized exchange. Okay, these are kind of the main reasons that people are using decentralized exchanges. And now there is a lot that you can do on decentralized exchanges. There's different staking mechanisms. There's you know, futures exchanges. There's options exchanges. There's a lot of things that you can do depending on if you're a trader or not. But for all intents and purposes, this is what a typical exchange looks like. It is easy way that you come and trade one crypto asset for another, or you can come provide liquidity in a decentralized manner. No one's taking custody of your funds, and you can make fees on the activity, not even just the price going up of your crypto assets, but on the activity that's being generated. All right, it's the volume that matters here. So that's an intro to a decentralized exchange. And if you're a student of ours, or you're interested in joining our you know, our educational platform, we have full broken down. This is just a very, very basic intro to what decentralized exchanges are. All right. So if you're, you know, you're just starting out with us, bear with me, because this is a very, very brief intro to what we actually cover as far as decentralized exchanges go. I just want to show you what it is. Another platform that I'd like to show you here today is, I'm sorry, I'm going to have to stop sharing one more time so I can jump tabs, but let's go over to Aave. It's a borrowing and lending protocol. So this is when we, again, kind of continue on that conversation of becoming your own bank. Well, here's a way that's really, really cool that you can become your own bank. I know that that Gaven has talked about borrowing and lending a little bit with you all here, but let me get the screen shared. All right. So when we look at a borrowing and lending protocol, why is this a way that you can become your own bank? Well, the reason is you can quite literally loan yourself money without going through a bank. Sounds crazy, right? It's really not, and it makes a lot of sense when you think about it. The reason that I opened up this call talking about the banking failures is because of a lot of the over leveraging that takes place. It's because of a lot of the risky decisions that a lot of these institutions and banks are making. What's incredible about decentralized finance is back to the transparent nature of things, back to the permissionless nature of things, back to, right, all these things that I was talking about that are different. It's really black and white, and it's really, really cool. So when we look at a borrowing and lending protocol like Aave, this is the largest borrowing and lending protocol in DeFi. I'm not sure if I mentioned that, but there's a bunch of different blockchains that you can operate on, right? There's all these different networks that you could look at. But let's just say, for example's sake, we want to go supply some assets on the Ethereum network using Aave. So we've got our supply market and our borrow market. On the supply side of things, I can come supply my crypto assets and I can earn a yield. Where does that yield come from? Well, it comes from the borrowers. It comes from the people that are paying to borrow that money, you know, kind of like the banks do, right? That's how that you can get paid yield for things, is because they're making money on your money. So that happens here too. But the great thing about this is if I wanted to go, let's say, supply some ETH, first and foremost, I can come and I can just supply it and not ever borrow against it. I don't have to become leveraged in this scenario. I can just supply it. I can start collecting that 1.98% per year on my ETH that I already would have just been sitting on in my wallet anyway. So why not cash flow it a little bit? Or I can actually come tap into the equity of my ETH and I can borrow against it here in the borrow market. So let's say, for example, I supplied some ETH over here in the supply market. Then what I can do is I can borrow against it in the borrow market. So let me talk through. You might think, okay, cool, you can tap into the equity of your ETH. Like, let's talk about a real world scenario though. So last cycle in last bull run, and even actually more recently than that, but this really is when this stuff all clicked for me, was last cycle when I first really got into DeFi in 2021 and 2022. I realized, oh wow, this is a way that you can really play the game here. Okay, there's something that you'll hear when you're reading books about, I don't know about you, but I like to read books about learning from people who have what I want in life, right? And I'm learning different strategies, and I'm learning different ways to navigate business and finance and wealth and keeping it, because making it's not the hard part, it's keeping it that's the hard part. And so I got really into learning tax strategies, and I was trying to learn all the tax loopholes and how I can, and of course everybody comes back to leverage and borrowing and leverage and borrowing. That is how that's one of the greatest tax loopholes that we have. And it didn't make a lot of sense to me how I could do that with crypto, because I didn't want to go supply my crypto assets on something custodial like a Celsius or a BlockFi or one of those apps that, like FTX, collapsed because they took custody of your funds. You couldn't see it. They went bankrupt. Your funds went down with them, right? They got over leveraged on a lot of stuff. They got upside down on some bad deals, and just like these banking collapses that are happening. So I learned about these decentralized borrowing and lending protocols like Aave, where I came and I supplied my ETH, borrowed against the equity of my ETH. I borrowed USDC, which is a stable coin. And you might say, well, Coach Casey, that's crazy. It's got a 9% interest rate to borrow it. However, you don't borrow 100% of the equity of your ETH. That's bad lending practices, right? We know this when we think it through like traditional finance. You don't go borrow up to 100% of the equity of something, because in many cases you've got to be over collateralized. Your loan to value ratio should be healthy. All right, now, you know, in some cases that can be a good thing, but here these loans have to be over collateralized. So when I was talking about how it's very black and white, it's either you've got the collateral to back it or you don't. We will not lend you money if you don't have the collateral to back it. Or if you borrow our money and your collateral falls below a certain point and you're about to get upside down on this loan, we're going to sell off your collateral to make sure you don't get upside down on this loan. It's not like these banks that actually get upside down on all of their loans and then they can't pay them off. And then you have these big collapses and these banking failures. This is very black and white. And guess what? It's code. It's smart contracts. It's automated. There's no funny business happening here. The other thing that's cool about that is back to leveling the playing field. There's no credit score. There's no income verification. There's no because you're black, white, red, yellow, purple, green, blue. There's none of that here. This is code, smart contracts written on the blockchain, and you. There's no middleman happening here. So what I did was I supplied my Ethereum. I borrowed USDC against it. Took that USDC, turned it into dollars, cashed it into my bank account. I'm not creating a capital gains event for myself when I'm converting those dollars, because it's USDC for dollars. It's a taxable event, but not a capital gains event. I use those dollars to participate in real estate deals, like a fix and flip and a BRRRR, and then a long-term acquisition. But what a BRRRR is, disregard. We're not talking about real estate today. The fix and flip, for example, I tapped into the equity of my ETH, I borrowed against it, got the cash out to my bank account. I funded the deal. When the deal closed and I got the check from the title company, I paid off my loan. I paid back my USDC and I got my ETH back. So guess what? I got the ETH and the house. So now, not only did I never have to sell that Ethereum, I never had to pay capital gains and cash out my ETH and worry about, missing out on hanging on to it or whatever and paying taxes. I now got to keep both and didn't have to go through the bank. I didn't have to pay exorbitant fees. Yeah, I had to pay a little bit of a funding fee here for this process, but far less than I would have paid at the bank, and didn't have to go through all the headache. I became my own bank. I lent myself money. You don't have to go through banks. There is a new system now, everybody. You don't have to be using those things like we always have. because there's a better way. There's a more efficient way. And again, these are things that you have to learn the nuances of, because you don't just want to come here and supply your ETH and just go recklessly borrowing against it and get your ETH liquidated and be losing your crypto assets. You have to understand the strategy here, okay? You have to understand how ETH going up and down affects your position. You have to understand how whatever asset you borrow against it can impact that position. You need to understand how you can come and supply and remove and add collateral and pay back your loan. Okay, so there are nuances that come into this. But I just want to open your minds up to what's possible, that you can become your own bank. And like the wealthy, you can implement these strategies like buy, borrow, die. That's what I like to do. I buy appreciating assets, I borrow against them, I tap into the equity of these assets, and then I go buy more appreciating and cash flowing assets that I then borrow against to then go more, right? And I will die in debt. Why? Because we have this system that allows you to do that. It's how you avoid paying taxes. It's how you become more capitally efficient, right? But even if that's not your strategy, this is a strategy that you can come implement and just simply supply and earn some interest, and you can help out the market. Okay? So, with that being said, that is decentralized exchanges that you can use for swapping and trading and earning fees, cash flowing your crypto assets, and helping to create liquid markets where we, the people, are funding them rather than just being seeded by institutions and exchanges or brokerages and such, right? And then this is borrowing and lending on Aave. And so this is a way that we can become our own bank, not have to rely on the things that we've always relied on. We can supply, we can borrow, we can do all kind of complex strategies here. I mean, I've done some pretty crazy looping strategies on borrowing and lending protocols. So you can get as leveraged or as conservative as you want to be with this kind of stuff. It's really depends on your skill level, what you know, and you know how really how well you can navigate this space. But the opportunities are endless, and there's so many doors that open up and so much freedom that comes from knowing this information. And again, I'm not worried about looking for a lender that's going to charge me 12% for a couple month bridge loan. No, I can do it right here. I can fill that gap myself. That's pretty cool. So with that being said, I'm going to jump over to last tab. I hope you can see my screen here. Let me check. Yes. So with that being said, all of this is in front of you. Okay. I mean, I've shown you a lot of DeFi today. You've seen what the potential is. You've seen kind of the differences, the pros and cons of DeFi versus CeFi. You've also seen the impact that it's had in my life personally, right? I went from dead broke, I mean, hundreds of thousands of dollars in debt, to now living a pretty great life on my terms. Right now, I'm presently sitting, beautiful view, hanging out, and just, I'm not sitting in an office that I don't want to be at my 9-to-5 job, because I took this stuff seriously, because I understood that the window is closing here to learn this stuff, right? So I always say we've got a once in a lifetime opportunity to create generational wealth here, but you've got to have a sound strategy. You can't come at this thing and you play spray and pray, right? You're throwing your crypto at every single coin that you see, that you hear about, every single DeFi protocol that you see, that you hear about, because you just think that that's how you make money in this space. And that couldn't be further from the truth. That's like a one-way ticket to wrecked city. All right. You're going to get yourself in all kind of bad positions. You're going to get yourself liquidated, XYZ. If you're not understanding, if you don't have somebody to show you how to reduce your learning curve in the space. Okay. And that's really what we're here for. Because like I said, the opportunity cost of not learning this is just far too high right now. I mean, you look at cryptocurrency has become weaponized in this current election for who can be the more crypto-friendly president between Joe Biden and Donald Trump. Crypto is here to stay. I mean, fun fact for you, more people in the United States of America own cryptocurrency than a dog at this point. So it's not just some like little fly-by-night thing that's going away. No, this is a big deal, and it's here to stay, and you can still be at the forefront of this revolution. We are pioneering a new financial system. Our government is getting behind it. There's been a massive number of legislation through Congress the last couple of weeks pertaining to cryptocurrency, and most of it pretty positive. They're starting to open up to it, and they're starting to understand the benefits of this stuff. So, I mean, I always say to people, get on the train or get out of the way. Or I say, join us or watch us, because you're going to have to learn it at some point in time. It's inevitable at this point. There is no going back. It's one of those like Pandora's box things that there isn't better back there, right? This stuff is better, and it's where we are going. It's just we're kind of in that process of figuring out how it's going to go and how it's going to get there. But I do think that the window of opportunity is closing a little bit. The reason why I say that is because right now we're presently in a pretty good looking bull run. Markets pulled back, cooled off a little bit like today, like right now. But I believe that we're going to have a really, really strong year in the market. We're coming off of what's called the Bitcoin halving this year, which is an event that causes a supply shock to Bitcoin. It reduces the amount of Bitcoin coming into circulation every single day. We've got the election. You know, typically we see the S&P post a strong year in an election year. We see everybody wants the economy to look wonderful in an election year. So there's a lot of positive catalysts, like the Bitcoin ETFs that were approved earlier this year, the Ethereum ETFs that the first part of them was approved. The second part of them hasn't been approved. They're not live for trading yet. We're still waiting on the S1 approval. I think around July 2nd, though, is if I had to give you, it's kind of the word on the street that I'm hearing. But anyway, a lot of positive fundamental catalysts happening, and not just in the United States, but outside of the United States. You know, there's these ETFs are launching in Hong Kong and Australia and Thailand and all over the place right now. So that's kind of why I say the window's closing, is because people are getting hip to it. And, you know, up to this point, we've really been ahead of the institutions, which is kind of crazy. We haven't really seen a lot of retail-led asset classes like this. Typically, the big dogs are in before the people. Well, now we can get in before them, and we are, right? The inflows haven't been astronomical in these ETFs and in Bitcoin and in Ethereum, and there's still plenty of opportunity. But with what I said about all of the legislation that's been through Congress the last couple of weeks, I think they're going to start tightening the belt a little bit. I think we're going to have to button up. Crypto is still the Wild West. And while that can be a really fun thing and a really good thing and a very, very lucrative thing, it can be a bad thing. There's a lot of bad actors in this space. And so there's a lot that needs to get changed. But I think the days of hitting a 1000x in 3 hours on, you know, little things that pop up here and there, I think that's going to be coming to a close here soon. It's not what you should be focusing on anyway. We talk real strategy. We teach you how to build longevity in this space, but we take little wins here and there too, right? So, but I think the window is closing. And so I want to emphasize the importance of this opportunity that's in front of you. And so focusing on this stuff for the next 12 or so months, it could really set you up for the rest of your life. And I don't say this isn't some like bullshit sales tactic. It did for me. And I can only speak from my experience. And it did for me, okay? But like I've told you before, there's problems that you're going to face along the way. And we've talked about these in the past couple of webinars I've done. And listen, guys, I'm actually going to do a Saturday workshop, I believe 2 Saturdays from now. Yeah, we'll be posting about it. You'll see it on all of our stuff. We're actually going to do an in-depth, like a boot camp masterclass, where we're going to be walking through, click this button to set up this and click that. And so keep an eye out for that. We're going to have that in, I think it's going to be 2 Saturdays from now that we will have the masterclass, where a lot of these right now that I'm doing with you, they're just to kind of introduce the concepts. That's going to be more hands-on, where it's actually actionable and you can do things. All right. But if you're trying to do this stuff alone, it's not that hard to learn, but it's finding the right information. There's a lot of things that people love to half teach you on the internet. You can learn anything you want for free on YouTube in the world, like basically anything. You can probably learn rocket science at this point on YouTube. However, just like I mentioned when we were on the borrowing and lending protocol, I can show you how to provide liquidity on a borrowing and lending protocol. That's simple. I can show you how to borrow against it. But what they don't want to tell you is how to avoid getting liquidated, how to understand that relationship of how the price impacts that position. Yeah, people love to show you how to leverage trade. They don't explain to you the nuances of doing so. People love to show you how to provide liquidity, but they don't tell you how to pick the pair to provide liquidity to and where to set your range so that you're not getting destroyed by nuances like impermanent loss when that's happening. So by all means, you can go learn any of this stuff for free. I tell you that from experience in doing so, we're here to reduce the learning curve for you guys. So, help you navigate the space in an environment with people that are like-minded, a community around you. We've talked about how important that mindset is, and also that are always on top of these emerging ideas and these emerging trends, right? Like, we were ahead of all of the big AI coins. We were ahead of all of the big real-world asset coins. There's airdrops that I'll talk about here in a moment that we've been talking about for almost 2 years now, that actually 2 of them just launched this past week. And a lot of our students got thousands and thousands of dollars for free. So there's a lot of noise and information out there, but you've got to have a community around you. You've got to have a focused, like-minded group of people that knows what they're talking about and has the experience to help you avoid the pitfalls, but also just for support and sharing wins, right? So you've got 2 options here. You can do this stuff yourself, or you can follow the proven roadmap that we've had, like these guys did. This screenshot I took today for everybody to show you that I'm not making stuff up, that this is that recent. Gentleman by the name of Chris, who I've got to give a huge shout out to Chris. He is a killer student. Chris has been airdrop farming. He's been doing all kinds of stuff in DeFi. This guy, if you want to talk about an action taker, Chris is an action taker. And I always say action takers are money makers. And look at this. We're talking about the ZK Sync airdrop. I did a multiple part airdrop strategy segment last year, and ZK Sync was always in it. We were always talking about ZK Sync strategies. A lot of these people have been farming ZK Sync for a long time. Yesterday, Chris got almost $3,000 worth of ZK when their token launched for essentially free. Like, there's activities and things that he had been doing for the past year. $3,000 for free. An airdrop is a token distribution mechanism that projects will use whenever they first launch to reward early users. Same thing with Coach Jordan over here. This is actually one of our coaches. This is from a conversation that we were having. He said, heck yeah, I ended up with about $1,600 in ZK. A lot of these people got this money from not even really trying very hard to do it, or like already doing things that they were already doing. So I say this because, again, just be around the right people that can help you find the right strategies. This is money that is, $3,000 is a lot of people's monthly salary. And these guys just got it for free for just doing things that they already would have been doing in crypto. But because they had the right mentorship, because they had the strategy, okay? So if you're smart and you want to go with that option number 2, you want to be like Chris, you want to be like Jordan. If you are an action taker, you're not somebody who's like, oh, crypto's a scam, life's out to get me, right? There's no such thing as free money. No, it wasn't free money. These guys put in sweat equity. They learned and they grinded for this stuff, right? So if you want to be an action taker, we've got a couple of different options for you. We've got when you join our community, there's really kind of 2 paths you can take. You can go the self-guided route, right? It's a e-learning option that you'd have access to most of the community calls that take place throughout the course of the week, but it's an e-learning course. It's not just a couple of videos that we chucked up there for you. It's a real coursework that you go through, but it is self-guided. It's a done on your time, at your pace type of thing. You do get access to the community where you can chat with people, but it's not live. It's a self-guided. We also have live courses that me, Coach Casey, Miss Wonderful over here teaches, that I love hanging out with you all and spending time in these live courses because you can ask me questions and we can interact with one another, and we get to have that energy exchange, and I can help you with what you personally are stuck on, right? So there's the self-guided, there's the live options. We've got all kind of options that kind of fit wherever your budget's at, whatever your needs are. So if it's something that you're interested in, Ruben, can you drop the link in the chat to book a call with our team? We'd love to see how we can fit into, and we've got options to start at $97. We've got things. So really, it kind of fits in anybody's budget, depending on if you're looking for a tailored white glove one-on-one solution, if you're looking for a group 5-week-long course that's it's a dynamic group learning environment, or if you're looking for maybe a self-guided, you just kind of want to do it yourself, you don't really want to have the support around you, that type of environment as well. So really, there's as much support as you're looking for. There's options to fit all budgets, and we just want to help you, like I said, reduce your learning curve in the space. We want to be your trusted mentors. We're not going to be the moon boys, as people like to call them, that are always just shilling you, the next 1000% gain, stuff like that. I promise you, we have lots of great opportunities and things that come up. We have a lot of fun around here, but we're not just going to see you get rug pulled after rug pulled. This is a place where collectively we are elevating and we are building generational wealth together, and we are again pioneering this new financial system and taking back sovereignty and control of our finances and our futures. And so I appreciate everybody coming and hanging out today and listening to what I had to say, and hopefully you learned something new about decentralized finance and about what we have to offer here at the ARC, and hopefully that we are in alignment. And if we're not, that's totally fine as well. I'm glad that you came to hang today, and I hope that you get a lot of value from our free content and that you stick around or that you come back for the next one. But again, action takers are money makers, guys. And I say this because I went through a lot of just watching and consuming content and never taking action on anything for a long time. And when I did, it was from June through the following March that completely changed my life. That next March, I quit my job. I had achieved my financial freedom. I was doing whatever I wanted to do. Okay. So this can happen to you. Where we're at in the market right now is very similar to where it was when I started. And past performance does not guarantee future results, right? I know it sounds cliche, but it's true. Like you're not going to do all the same exact things that I did. I can't promise that I'm going to set you free for, like, I'm not trying to say, I'm just saying that the opportunity is there. And the people that take action are the ones that are going to do something about it, right? It's the time is going to pass either way between now and whenever that proverbial future date that you think comes. So you can either take small steps every day towards your goals, or you can let the time pass. So action takers are money makers. I hope that you guys are booking calls with the team right now. Again, Ruben, if you wouldn't mind dropping that link in the chat, give us a call and just see if there's anything that that you have questions about, right? If maybe you're a group learner, if you're a self-starter that you want to go through the guided course or the self-guided course, or if you're not really sure which one would suit you better, which one fits your budget, which one fits your learning style, just give us a call. We're happy to connect with you. And like I said, we're grateful for your time, and you're not going to be hard sold on these calls. You're not going to be, no one's going to twist your arm or anything like that. It's just, we really want to place you in the proper, for your financial situation, your time situation, all those kind of things. So yeah, we'd love to connect with you. But with that being said, connect with us, connect with me. This channel here, arc.revolution on YouTube, is where you can find us. We go live every single Thursday. It's where we post educational content. It's myself, it's Coach Gaven, it's Coach Igor. So you'll see a bunch of different familiar faces from the ARC around here, and we're really glad that you're here. Appreciate it. I've recently started a TikTok account. So my name's Casey Talks Crypto on TikTok, so feel free to come hang out over there. And my Instagram is at Casey_Craig. So if you're looking to connect with me personally, those are my channels. Our stuff is all arc.revolution if you want to connect with us online. And with that being said, now I will finally close, and I will stop sharing the screen. I'll check for a couple of questions and see what you guys have to say, and then I will send you on your way to enjoy your beautiful Thursday. All right. Let's see what's going on in the chat. All right, I see Mr. Ruben. Thank you, Veronica. Veronica, I appreciate you saying that, because I am very passionate. This community is like my heart and soul. It means the world to me. All right, any questions that anybody has? Anyone using crypto to collect client payments from a business? Yeah, so there's a lot of companies that do that. We actually accept crypto, and there's a lot of, if you're talking like from a B2B perspective, there's a lot of companies that do specialize in that, Joseph. Yep. All right. Did I post the different balances you can start with? So you actually don't have, there's no set amount that you have to start with in crypto. So I wasn't kidding when I said you genuinely could start providing liquidity with $10 if you wanted to. There's no minimum amount that you have to start with. Now, our courses obviously have different costs depending on what you do. If you go with the self-guided option versus the group courses versus like one-on-one style, like that's going to be different. But for you personally to get started investing in cryptocurrency, there's no minimum. So yeah. All right, well, I don't see any other questions from anybody. So like I said, thank you all for your time today. I appreciate you so much. I am so stoked for all of you who are here. being action takers, as I said, and trying to better yourselves and just come and really seeking that self-education. So kudos to you all, and I hope you have a beautiful Thursday, and I'll chat with you soon. Thank